Good morning, everybody. It is Tuesday, May 21st, 8:45 a.m. We are back again on another market open. I am not late, as the comments are suggesting. Literally, if it's not 8:45 a.m. on the dot, everyone thinks I'm late. Everyone. Oh, he's sleeping. He's blah, 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 this. We're here. And you know why we're here? Because we're alive. We're ready to go. We're analyzing the markets. By the way, I was up at like 5:30 a.m. today. So I genuinely wake up by around 6 a.m. latest every single day. So if I'm ever late by like 10, 15 seconds, I'm just getting things set up. But if I oversleep, I'm not waking up for the show. I'll be up like 40 minutes after the show if I actually oversleep. So usually I'm up. It's never a sleep thing. It's just like getting the cameras and everything ready to go. All right, we're here. We're live. Thank you everybody for being here. Another day. Another morning, literally being alive on planet Earth. I think we all have to remember we are actually human beings that are conscious of our existence right now on planet Earth. Like, that is the most insane thing ever. But we're doing it again for another day. And one day we'll all be dead. So it's important to remember that we have these days. Today, Bitcoin is taking up headlines. Right now, we got Bitcoin here at 71,000. Absolutely incredible price action we're seeing by Bitcoin, 71,343. Ethereum is doing pretty good as well, up about 20% over the past 24 hours. The reason for that, and we'll get deeper into it, 3,700 right now on Ethereum, is likely because spot Ethereum ETFs are going to be approved. We kind of knew this was going to happen, but once we got confirmation that it was going to happen, and it's not literally confirmed, but it seems like it's going to be confirmed, people are trying to front run the Ethereum pump that will happen from all the new capital flowing into Ethereum. So we got a lot to talk about in regards to Ethereum, Bitcoin. OpenAI is having some scandals that I think are very interesting to discuss in regards to how Sam Altman is playing the game of AI. So we'll be talking about Sam Altman. We got to talk about the macro. Really a lot of interesting things have happened in the past 48 hours. Nvidia earnings is tomorrow, and I think Nvidia is going to dictate a lot about what happens in the broader ecosystem. So we got to dive into that. And we also want to talk about Apple, Microsoft. Microsoft had a huge event yesterday. It wasn't streamed publicly, but basically they've created new AI versions of the Surface Pro, and their sort of top-line PC models have all turned into AI PCs. And so the question is that a new era of growth for Microsoft that the market wants to expect? There we go. We're here. Good morning, everybody. Welcome to the market open. Jimbo Slipe, Top Dasher, June, I'm Beneficial, Broccoli Bob, Adris, Colorblind Collector, Mr. Russo, Sanjay, Real Baby Pluto, Eric Wood. June says West Coast viewers get up at 5:45 a.m. to watch. That's true. Shout out to all the West Coast viewers, yo. If you're up early and you turn me on, that's awesome. But if you get up just to get into the show, that means the absolute world to me. So thank you all for being here. Ricardo, Ty Gordon, Mark LeBlanc, William. Good morning, Amit. It's my daughter's birthday, so you're off the hook today, but I love it. Happy birthday to William's daughter. Thank you, William, for being here today. Brandon, Dimitri, Jarrett, Bruning, Alex, Rebecca, Michael Saylor has said Ethereum will not be approved. Interesting. I didn't know he said that. We'll get into that. We all know Saylor loves his Bitcoin, so he always has a little bit of jabs to throw at some of the other coins, but we'll talk about that as well. Luffy, Krishna, John Paul, Jay Duff, Denver in the house. I love it. Thank you for being here. All right, let's get started. I think we're actually going to start with macro before we go to Bitcoin, and then we'll go from there. Let's start off with Liz Young. She was on CNBC last night. I think she had some interesting comments about where risk appetite is coming from for the market. So we'll start off with her, and then we'll transition to Bitcoin. And I think what she has to say about the macro also gets us into why there is so much excess liquidity that is flowing into the crypto class. Here we go. Let's go with Liz Young, then we'll keep going from there.
On Wall Street are about as common as seeing a panda in the wild. But before you start celebrating, consider this question. Are the lack of bears bad news for the bulls? Because sometimes you just get a little too enthusiastic. Let's talk about that and more with the head of investment strategy at SoFi. That is our friend, Milwaukee native, Liz Young. Liz, thanks for coming on. You get the point, right? If Marko Kolanovic goes down, because he's the last bear, I think, there's literally no bearish strategists left on Wall Street. And that I know it sounds positive, but the reality is, if everybody's positive, could that be a negative?
Well, usually when everybody thinks something is going to happen, the opposite happens.
Bingo.
And what we all expect to go on is not actually what shakes out. We saw that in 2023. There was a lot of expectation for a recession, self-included, I will admit. And that is not what shook out. So when you have everybody expecting the same thing and all this optimism, that does tend to lead to something that could be a surprise. But look, it is difficult to get that negative in this market. Momentum has been intact. There are clearly buyers out there that just continue to want to rotate around within equities. We haven't seen people really exiting the equity market. So risk appetite is still alive and well. Not to mention the Fed has made us so data dependent. And frankly, the data, both earnings data and economic data, although softer, is not alarming and not sending off signals that we should be scared.
I think we just, and by the way, myself included, Liz, but I'll put myself in your camp as well, and I love the honesty. I think everybody, me included, wildly underestimated the amount of money that is just sloshing around the world.
Well, you know what's interesting about that is that the story had been for a long time. There was all of this savings pent up, and that's how consumers were able to spend so much. And consumers continue to want to spend. There's always going to be a desire to spend. But I think what's happening now is that spending has shifted out of cash and is starting to be more on credit. And the thing is, when you go up to buy something at the checkout, they don't ask you if you're paying off your credit card bill every month. But we know that credit card balances are rising. We know that some delinquencies are rising. So there's clearly been less abundant cash in the system, at least in certain groups of consumers. And I think inflation is starting to take a bite, which is what we're hearing from some of those big companies, big retailers and consumer-facing companies, that consumers are being more careful. They're trading down. So it's not something that's happening fast, but it is something to keep an eye on. But at the same time, it's still happening. They're still spending. So the numbers are looking okay for now.
Now, what Liz is saying right here gets us into what happened with earnings today for some big box retailers, and then we'll transition into Bitcoin. So her argument basically there, and again, Liz has been relatively bearish for the past couple of years. Her argument now is she's kind of admitting, well, if there's money in the system, and the reason there's money in the system is because there's jobs. Why are there jobs? Because we didn't have an economic crash. Again, the bears, Liz's thesis, the way I understand it over the past couple of years was there will be a crash because inflation is not slowing down. As a result of that, consumers will lose purchasing power. They won't be able to spend. If they're not spending, earnings can't increase. If earnings can't increase, companies can't, spend to advertise money. So then Facebook can't get advertising revenue, right? All this is interlinked, but it didn't play out that way. Inflation was elevated a bit higher than what the Fed thought it was in terms of the actual data. And now we're seeing that in shelter disinflation and oil disinflation, new cars, used cars, et cetera, are going down. And as a result of that, if inflation is coming down, although prices are still remaining high, consumers have the money to be able to spend. Now, unemployment's going higher. But again, when we talked about this 2 weeks ago when the unemployment data came out, it's not going high to the point where it's this catastrophic 5-6% unemployment levels. It's going up by like 20,000 extra every other week. So it's kind of that zone where the Fed's like, okay, we are seeing unemployment go up, which is good to get growth to come down, which helps inflation, but it's not going up, or unemployment's not going up to the point where inflation's falling off a cliff. Therefore, we need to cut rates immediately, which means people still have the money to be able to spend. And it also means the Fed can at least, I think, cut once this year because they definitely want to front run unemployment gaining momentum and going higher. Also, one could make the argument that if AI is as transformational as it is, and we'll talk more about that with Nvidia in a bit, and it actually produces more jobs while creating deflation, which means you get productivity levels that increase, and you actually have more people that have opportunities to participate in the prosperity that AI creates. One could argue maybe unemployment doesn't get to those dramatic levels that the bears are saying 5, 6, 7%. Mind you, we did have unemployment at close to 15% during 2020 during the pandemic. So the idea that it's at 4% right now because the economy has grown and companies have taken the steps to do what they need to do while laying off massive amounts of people because those people weren't being productive, I think it shows that the economy is actually in a stronger spot when it comes to unemployment and when it comes to inflation as well. And that's what we're seeing in the economic data. The 10-year today, right now, 4.416. So up a little bit from last week, but down overall, down from 4.7 that we saw a couple of weeks ago, which is good to see on the 10-year. That's coming down. Oil prices are down again. Look at that. Oh, this is a nice one. I didn't even look at this morning. Oil's down almost 2%. Wow. That is incredible. That is something we absolutely want to see when it comes for inflation, when it comes to inflation coming down. And then on top of that, while oil is coming down and the 10-year is coming down, we've got gold and silver going up. And the reason I think this is interesting as well is because one could argue a lot of this potentially is just China buying up gold and silver. Silver making just an incredible move over the past 10 years, highest it's been since 2015. Gold, highest it's ever been. One could argue people are diversifying their asset classes, and this is also an argument that interest rates are going to come down, because when interest rates come down, the yield you're getting in the money market funds or other interest-bearing assets is also going to go down, and people like to hedge with things like a gold or like a silver, or potentially like a Bitcoin that we'll talk about in a second. So from that perspective, it does seem, going to Liz Young's point, that there's money in the system. And if there's money in the system, that money is going to make its way into a variety of other asset classes. And the meme stocks in general are another reason where it's like, dude, there is money out there. And potentially, and we talked about this last week when I was trying to make sense of why are meme stocks going up. People probably made money off other assets, and they're gambling with some of that money in these meme stocks. There's no way a Faraday future can go up this much unless people have the money to allocate towards it. And either everyone is just a degenerate and they're spending their life savings on Faraday future, which I don't think is happening, or people are like, you know what, I made 30 grand in the markets last year. I'm going to play with 5 grand. And if everyone's playing with 5 grand, then things can go up relatively quick. So that's what we're seeing in the macro right now, and seeing some momentum there. Let's take a look at equities real quick, and then we'll get into Bitcoin, which is the top story. Robinhood 21.22 in the pre-markets. We are above $21. I'll talk more about them as we get closer to the market open. Vlad Tenev did an interview yesterday, or a podcast, and he said something that I thought was really interesting. So we'll talk about what Vlad said. But the reason you're seeing the surge in Robinhood right now is because Bitcoin here is 71,383, Ethereum at 37.95. The reason Robinhood, I think, is gaining momentum right now, not only were the meme stock rallies, not only did meme stocks rally last week, which pushed Robinhood to number 80 in the entire US App Store, but now you got Bitcoin. And we saw Robinhood's crypto numbers in March. When Bitcoin went to this level, 73,000 in March, Robinhood did $23 billion of crypto notional trading volumes, which was 41% of Coinbase's entire Q1 volumes in 1 month. We're back at Bitcoin at 71,000. In April, we did 10 billion of volumes, and Bitcoin fell 10% or 5%. So it'll be interesting to see how those main numbers reflect some of the crypto results and momentum. And I think, the cat's out of the bag. People realize what's happening with Robinhood. It is the best way to play the retail momentum that we're seeing in the markets, along with the variety of other things that they've announced, like gold and the credit card, et cetera. And so the market's like, you know what? This thing is probably going to have some momentum. HIMS is flat in the pre-market. Nvidia up a little bit, 948. We'll talk about them in a second. Palantir, 2143. I bought 200 shares of Palantir yesterday. I'll talk more about Palantir in a bit. S&P 500 slightly down, 529.66 in the pre-markets. GameStop is down 5%. AMC down 2.9%. IWM down a little bit as well. Now the Bitcoin stocks. Let's get into Bitcoin. MicroStrategy, 1750. On the day. Coinbase is up 3%, 233. CleanSpark up 1%, 1851. Bitfarms up 1.36%. Marathon 2244. Robinhood 2126. And then Ethereum and Bitcoin 3,700, 71,000. We're going to start off the Bitcoin coverage by me playing a video that Mr. Tom Lee retweeted in the morning. And I want to show you this video, and then we'll get into the Ethereum news. We got to get Tom Lee on the show. I got to get in contact with his folks. He told me to get in contact with some of the people at Fundstrat, so it's just a question of making it happen. But I think we'll get him on the show eventually. Here's Tom Lee versus Andrew Left, who's the guy that's currently shorting GameStop back in 2017. Andrew Left has some interesting words for Tom Lee when he said Bitcoin will go to 25,000 back when Bitcoin was at 5,000. Here we go.
What's it worth in a year, and 2 years, and 3 years?
If it's 5% of gold in 5 years, it's 25,000 per unit.
When a headline comes out that Mr. Lee puts out and was picked up widespread with a $25,000 target, based on 5% of the total gold outstanding, he has to understand what he could have done to the individual investor who's going to follow him into this trade at 5,600, and it's irresponsible.
As an investor, you do want to have some exposure. I mean, imagine if you could have bought Google as an early stage company in 2000, but you were worried because you didn't know if, how big the search market was going to be. I think that's really the same issue you'd face today when you think about blockchain. I wouldn't want investors to put 100% of their money into Bitcoin. Just a 2% exposure actually helps your overall returns without letting you take that much risk.
Mr. Lee, in 3 weeks, what do we buy? Bitcoin 1 or Bitcoin 2? Do we buy today? We see Bitcoin Gold, Bitcoin Cash. If this is going to become investable long-term for the future, it needs to stop being so volatile. It needs to keep its identity, and it has to be labeled. Do we understand? Is it a currency or an asset?
All right. So the reason I wanted to play that is because I saw that a couple of days ago and I thought it was absolutely incredible that Tom Lee's making a very, one could argue reasonable argument. Bitcoin was at 5,000. He says, hey, if it's going to be 25% of the market cap of gold one day, then assuming it gets to 25,000 is not that crazy. And I know in hindsight, it's very easy to be like, oh, that's that makes sense. But at the time, if you took a bet on Bitcoin, you had to have a lot of guts and courage. It was not easy to think that Bitcoin could 5x from that $5,000 price when most people thought that 5,000 was insane and ridiculous. Bitcoin now at 71,239. It's pretty obvious what's happening here. I'm not a genius for saying this, and I don't think anyone is a genius. It's the supply shock, and we're seeing it happening right now with the ETF. So if we look at the ETF inflows right here, again, after the halving event, there is always momentum about a doubling in Bitcoin over the next 18 months. For the past 6 days, we've had 60 million, 100 million, 303 million, 257 million, 221 million, and 237 million of net inflows. And Grayscale, Bitcoin Trust, the thing that has been selling a lot of them, the CEO stepped down the other day or yesterday, has started to buy and has started to lose not lose their inflows. So BlackRock bought 66 million yesterday. Fidelity bought 64 million. Bitwise had 24 million. By the way, I will be interviewing the CEO of Bitwise, Matt Hogan, on the channel on Thursday. So Thursday, mark your calendars, 7 p.m. Eastern Standard Time. He will be live on the channel. Matt Hogan, awesome dude. Their Bitcoin ETF manages $2 billion of assets. And he will be here live. We tried to do it in person. I asked if I could go see him in San Francisco because I'm going to be in California in June. But unfortunately, the dates that I'm there, he's going to be in Nashville. So not able to make it in person, but he will be on the channel live. And we're going to get to ask him about the economics of the Bitcoin ETF and how does it make sense and what's actually happening here. And so we'll get to talk to him there. But they brought in 24 million, 68 million from ARK. And then the rest of the ETFs brought in some more. Grayscale brought in 9 million. When there's only 450 million mined a day, or 450 Bitcoin mined a day, and the ETFs are gobbling up. I mean, let's just do some math right here. The ETFs did what? 237 million? Okay, let's ask Siri. What's 237 million divided by 70,000? 3,385 Bitcoin were swallowed, at assuming an average price of 70,000, by the ETFs yesterday. So it's like, hold on. If they just bought 3,000 Bitcoin and we only mined 450 new ones, it's like, maybe that supply chain thesis might be, or a supply shock thesis might be intact. And that's going to be an argument to think about when it comes to what's going on for Bitcoin. So we're seeing a lot of momentum. We're seeing a lot of momentum in the context of Bitcoin. And that's why things are starting to go better. Bitcoin right here, 71,163, Ethereum 3784. Okay, now the other thing that's happening on Ethereum as well, or the reason why Ethereum is going up is because Ethereum ETFs are likely being approved. So one of the head Bloomberg reporters, this is like the guy to talk about ETFs and specifically Bitcoin ETFs, he reported that there is now a 75% chance, based on the conversations he's having with people at the SEC and people who are applying for spot Ether ETFs, that this thing is going to get approved. And the SEC is likely going to make a decision by the end of this week. And by next week, we're going to see some momentum in the decision becoming real. If that's the case, we saw what happened with the Bitcoin ETF. So, we went from 40,000 at the time to 70,000. There's it's not that crazy to assume more money is going to come into Ethereum. And as a result of that, more money is going to be flooding the entire crypto ecosystem. So Bitcoin ETFs might get a piece of the pie because, if BlackRock's pitching a brand new institution on their Ethereum ETFs, they can also pitch the Bitcoin ETFs, right? And you can kind of really get clients and assets hooked onto a variety of products that a firm could offer. And that would create all the infrastructure needed to get the Ethereum ETFs to start to do better. Now, the only concern I have about Ethereum ETFs is I don't understand Ethereum's technology as well. I know that for NFTs and smart contracts, it's valuable. But as a store of value, not totally convinced it's that exciting. Now, granted, whether I'm convinced or not, I think doesn't matter because when it comes to these types of asset classes, the top ones tend to win, right? So Bitcoin, Ethereum, Solana are the top dogs and no one's really replacing them. They have network effects. They're embedded within institutional exposure and retail exposure, and they've been around for the longest. So as long as there's some utility to it and it's seen as productive in some capacity, we're going to see momentum come into the Ethereum ETF and people are going to buy it just as a way to get exposure to crypto classes. And again, that's great for Coinbase and Robinhood because these are Coinbase on the institutional side is going to get a lot more trading volumes. Robinhood, if Ethereum goes to 4,000 or 5,000, I mean, Robin is going to get a lot more people buying Ethereum on their platform. And I think we're seeing, given the numbers that they showed, that there's more momentum for people to buy crypto on platforms like Robinhood. So we're seeing a lot of momentum there for Bitcoin and Ethereum. Let me know in the chat who owns Ethereum and who's been in this one for a long time. I asked people on Twitter, and it seems like I have a decent amount of followers that have been following Ethereum since like it was like $200, $300. I remember Ethereum back in 2021. I bought like $10 worth of it on Coinbase in 2017 when it was going crazy with Bitcoin. And I didn't know what the hell I was buying. I was just like, oh, this is kind of cool. It was, I think back then it was like $300 or something. Or I think it mooned to like 1,000 or something, but never really bought more after that. And now we're seeing it at 37.85. The top was 4,800 on Ethereum. We touched 4,000 for a little bit in March. So the question is now, can we continue to go there? Baskar Reddy says, do you think Target reducing their prices on 5,000 items is the first step to indicate that inflation is coming down? This is a great question. And Baskar, this actually transitions us very well. So thank you for the segue. Usually I come up with a very innovative and interesting and fun segue that is undeniably humorous. But today, your comment lets me transition. It segues us into Mays and Losi's. Oh my God, did I just say that? Mays and Losi's. I swear to God, I did not make that. Macy's and Lowe's. Holy crap, dude. Mays and Losi's. Sometimes when you're just talking, dude, like in my head, I'm like, it's like I was like, my words were literally dyslexic for a second. Mays and Losi's. All right, so Lowe's and Macy's on top of Target. Let's talk about what's happening in the retail ecosystem. All right. So we had some pretty good earnings in regards to Lowe's, and this will transition into what Target is doing as well. So Lowe's beats on revenues and EPS, $21.3 billion, $3.06 EPS. It's not a phenomenal earnings. It's up 2% right now in the pre-markets, but it's enough for the street that had decent expectations that Lowe's was able to beat to deal with the fact that consumers are still spending. Now, Lowe's sales are still down year over year, but they're only down 4.1%. The street thought they would be down 5.2%. So we're seeing momentum in the retail part of the economy, which isn't just Amazon, Nvidia, Microsoft, like Lowe's. It's a simple company. They buy stuff for cheap. They try to sell it at a decent margin for a bit higher. That's how they make their money. $21 billion in revenue. By the way, while mortgages are close to 8%, which means people aren't really buying homes that much, which means people aren't buying the necessities and supplies you need from like a Home Depot or a Lowe's to furnish their home and to do all the things that's necessary to make sure their home operates in a productive way, getting refrigerators, washing machines, etc. Lowe's is still able to increase sales, even if it's not year over year, but over expectations during that time. When interest rates come down, Lowe's will have the capacity, in my opinion, to start having a surge in momentum because people will need to start buying things for their home and people will start buying homes as interest rates come down as well. So nice to see Lowe's momentum. Then you've got Macy's. That's up 3% as well in the pre-markets. Revenue, $4.85 billion versus $4.86. So slight miss on revenue. Earnings per share, 27 cents versus 15 cents. So that's good as well. Net income is $62 million. So that's down year over year from $155 million. However, it's better than expectations. And then what Baskar said in that comment is that Target is now reducing prices on 5,000 items, which means Target saying, wait a second, why would we have these high prices on all these consumer goods? Target right here up about 1% in the pre-market, or 0.33%. When people don't need to pay for this, people don't want to pay these levels. And if people don't want to pay these levels, people don't need to pay these levels. We don't need to keep these levels elevated. We can reduce these prices. It signals that maybe other retailers like a Lowe's, like a Home Depot, like a Macy's, like a Walmart, like an AutoZone are also going to lower prices. And if they also lower prices, we are going to see more disinflation. Costco was first in regards to recognizing that disinflation was happening last summer in July 2023. And it seems like we are on that path right now. Costco $7.95 in the pre-markets. So from that perspective, the reason I'm bringing this up is because if retail is starting to go well in regards to Macy's, Lowe's, etc., being able to beat their numbers and still maintain momentum, and the market's actually rewarding them for it, and the market's not, saying that you guys aren't doing enough. Macy's right here up 3.09%. It means that the economy is diversifying, or at least the rally is starting to broaden a little bit. Also, you got to ask yourself, if you're the market, do we want to buy Nvidia at 950, or do we want to buy Lowe's that's been beaten up a little bit because they're beating their numbers? With interest rates coming down, Lowe's is only going to do better. I think Nvidia is still a better pick, but if you already had exposure to that, there is other ways that you can play this rally, and we're seeing retailers put up the numbers they need to do. It's also showing that consumers have the money, and if consumers have the money, then they should be willing to spend as well. Okay, cool. So that's what we got in the context of retail sales and what we're looking at as well. Let's transition here to Dan Ives. He made some comments yesterday after Microsoft's event around Apple and what's happening with Apple. Let's take a look at what he had to say, and then we'll keep going from there.
From Microsoft today, basically calling them out and said, "Hey, Apple, where's your AI? You're behind."
Wow, Steve, thank you. Appreciate that. Steve Kovac, lucky to have Dan Ives sitting on the desk. What do you make of that? Little Apple versus Microsoft redux from like 40 years ago. Here we are again.
Yeah, this is going to be a battle, and we'll see from Apple WWDC, but from Microsoft from Nadella, I mean, it's clear they are in the lead when it comes to AI. I mean, you saw it from an open AI perspective last week, but this is showing what's going into the broader ecosystem. And I believe this is really just the start from monetization, what could ultimately be an incremental 20-25 billion annually that gets put into Redmond.
So that's the Microsoft perspective. What is the Apple perspective as far as you see it?
Well, I think this is really going to be a renaissance of growth for Cook and Cupertino. I think it's the OpenAI partnership, which we believe is going to be announced. That's the start of it, but it's going to really be an AI app store that Apple introduces, along with now AI coming to iPhone 16. This will be, I think, the most important event for Apple in the last decade.
But you call it a shot across the bow to Apple, but then you're glowing about what Apple's going to do in its own right. Reconcile those two.
Yeah, because I think Microsoft recognizes that the biggest fear is that Apple, which has been behind on AI, now starts to go after the consumer. Microsoft wants to own that. Now, I personally believe Microsoft owns enterprise, and we've seen that from a Copilot perspective, but they know that they're behind, and that's why this is an important event for Nadella to court not just developers, but consumers.
Important event tonight. That's Palo Alto, a stock you've sat on this desk and called it a table pounder multiple times. Now, it's had a great move. It had an upset and then a comeback. What now?
I think last quarter was a growth.
So Palo Alto didn't end up doing as well as Dan Ives wanted it to do. Palo Alto, we'll talk more about them in a bit. But what he says about Apple is really interesting. Again, he thinks there is a renaissance of growth coming for Apple. He thinks that WWDC is going to be one of the most exciting moments for Apple and in the trajectory of how Apple has produced momentum. Apple right now 191.4. Microsoft's event, we'll talk about them in a second, but they introduced some really interesting things, and I have a clip that I want to show about that in just a bit. I mean, we're going to see. We're going to see what happens at WWDC. Dan Ives has been pounding the table that Apple is having growth, that investors have left them for dead, that they don't, that they think the PE is too expensive because the growth isn't there. He says the growth is coming. And at some level, the stock market's either going to reward them or not reward them based on if the growth is there, not just based on the $100 billion of buybacks. And we'll see how that plays out. Now, again, last thing on Apple, we do think there is an OpenAI partnership in the works, and that's actually happening relatively soon for Apple at the WWDC event. We'll talk about the Scarlett Johansson OpenAI controversy in a second. But if that's the case, then Apple's going to have to deal with some of the issues that OpenAI is putting up, which is maybe not acting in the most ethical of ways if they partner with them. So we'll talk about that in a second as well. Okay, let's get on to this from a macro perspective. Kris just sent me this, and I thought this was a really cool thing to look at. So the Fed just put out some comments by all 12 of the Fed presidents in regards to how they think the market is going and where they think the market is going. And we can read a little bit of these comments and see how they're thinking about the economy right now. We heard from Bostic yesterday, one of the Fed presidents, and he had some, basic comments around being data driven and not thinking that a rate hike was coming. But let's read a little bit from all the highlights on the 12 different Federal Reserve districts. Okay, so Boston says, business activity expanded at a modest pace in recent weeks and prices rose slightly. Employment was flat overall, but one retailer reported significant layoffs. Convention and tourism activity grew at a robust pace. We're seeing that a lot in the travel stocks. Home sales increased on a year-over-year basis, making a turnaround. The outlook ranged from cautiously optimistic to bullish. Wow. That is a little bit of a change in tone. New York said, on balance, regional economic activity remained flat. Labor market conditions were solid and continued to normalize as labor supply and labor demand came into better balance. Consumer spending was unchanged after a weak first quarter. Housing markets strengthened with the spring selling season picking up beyond the seasonal norm. The pace of selling price increases remained modest. That's 2 for 2. in terms of being relatively bullish. Philadelphia says, on balance, business activity was flat in the current beige book period after declining slightly from last period. Employment edged up despite staffing and recruitment efforts on a crawl. Overall, the outlook is positive as firms remain optimistic about expectations for future growth. Wage and price inflation continue to moderate. That's 3 for 3. Cleveland, district business activity increased modestly, as did employment. Cost and price pressures changed little. Wage prices continue to normalize. Richmond said that consumer spending on retail goods was mixed, but spending on travel and tourism was up slightly. We're seeing that a lot in the United and American Airlines and Delta stocks of the world. Employment growth slowed from a moderate to modest rate in recent weeks, but wages continue to grow moderately. Atlanta, commercial real estate conditions slow. Transportation activity was mixed. Manufacturing grew slightly. Loan demand was flat. Energy activity improved. Chicago, economic activity increased slightly. Prospects for 2024 farm income were unchanged. St. Louis, economic activities continue to increase slightly since our previous report. Prices have increased modestly. The outlook was neutral to slightly optimistic. And all 4 of the other districts also are saying that we're likely optimistic in regards to what's happening with unemployment, wage inflation, and then manufacturing output and retail sales. So we're seeing right here from the Fed's beige book that we are getting a lot of momentum. Again, there's 12 of these: Boston, New York, Philadelphia, Cleveland, Richmond, Atlanta, Chicago, St. Louis, Minneapolis, Kansas City, Dallas, and San Francisco. All of them in different parts of the United States, trying to take a assessment of what's happening in regards to the economy. And pretty much all of them, 12 for 12, I mean, some of them is a little bit more cautious than others, but New York and Boston are saying, hey, we went from cautiously optimistic to bullish on our perspective. Now, why does this matter? All of those 12 presidents of the states I mentioned, the districts I mentioned, they're the ones who vote at the end of the day. They're the ones who actually make a decision on where the market is going. And if they, are bearish, then it's harder to see the economy starting to do better, right? Let me just make sure real quick that I'm live right now. Sorry, I'm back. Should be good. That was weird. Okay. You know what I think happened there? I have like 50 tabs open, but that's weird, dude, that the 50 tabs are messing it up. I bought the MacBook to not have to deal with this situation, but it's not internet, dude. It's not internet. I think it's the Mac. I actually think it's the Mac. I bought the MacBook because I thought it would be more advanced computing power. It's not the internet. The internet is fine. It's not the internet. That's weird, man. Anyway, ultimately, amidst volatility, it was just too high. The stream is just that hot. Yeah. Ultimately, I think all 12 of the Fed presidents are looking at the economy and they're saying, hey, things are relatively bullish. And if things are bullish, it's hard to imagine that we need to be super scared about where the economy is going right now. So nice to see that the Fed presidents are in the right perspective. Not enough RAM. Dude, this computer has RAM. It has RAM. I'm using Chrome. Yeah, StreamYard only works on Chrome. It doesn't work on anything else. So I can't use anything else. I would have to use a different software if I'm not using StreamYard then. But yeah, the Mac is not what I thought it would be. If it can't handle 50 tabs, it's like, dude, you got to be able to, unless I'm just crazy for getting 50 tabs. I don't think it's the internet though. I don't think it's the internet. Maybe we do have to dump the Mac, dude, because this has happened at least 5 times in the past month, and it's annoying. Like I need my tabs open. I need a bunch of different articles that I have up right now. OBS is worse, dude. OBS is worse. OBS is unreliable. OBS is like, I used OBS for the first 2 months of doing the market open. OBS sucks, dude. I wish I could use OBS. They just, it's hard to use OBS. But anyway, that's what we got going on right now. And it seems like the Fed is getting bullish as well. Now, again, if the Fed is getting bullish and all those 12 districts are saying, hey, we see economic activity going well, I don't know, man. It's the idea that we get a rate cut or the idea that we get multiple rate cuts is not as crazy to think. It's not as crazy to think. Michael Wilder, hello, thank you for being here. Martin, what's up? Broccoli Bob. All right, so let me pull up this right now as well. This is Jensen Huang at a conference yesterday with Bloomberg, talking a little bit more about where AI is going, specifically for the soft of different countries. So let's talk a little bit about this, and then we'll get into the conversation around Nvidia earnings as well. Here we go.
Jensen and I spent a lot of time talking about this and how it's expanding out. And, we're seeing, you saw an example from South Korea on stage,
yes,
right, with Samsung. You see this in the Middle East. You see it in sovereign AIs that are being built up. And, for a country to encapsulate its own culture and language and beliefs, that's happening in every country in the world.
Well, Jensen, you and I have discussed sovereign AI in the past. Some recent use being Japan as an example. But I go back to my same question about the durability of this market, moving beyond the hyperscalers to see big commitments at the nation state level. Again, is today's news an indication that happens because of AI factories, or are they running two separate paths?
No country can afford to outsource its intelligence on first principles. Every country has its native natural resource called its language, its culture, its intelligence. And now people realize that because their country's data is part of their natural resource, not just the copper mines and the gold or the lithium or whatever it is, the data is also part of their natural resource. And they have to make sure that they harness that natural resource and transfer it into artificial intelligence.
Okay, couple things there that Jensen said. Now, Jensen talked about a lot of things yesterday at that conference with Bloomberg. By the way, his earnings are tomorrow. He sounds pretty damn excited at that conference, basically saying, "Hey, like, I think we know what we're doing here when it comes to AI." One of the things he mentioned here is that the sovereignty of data that countries need to protect is going to be incredibly important over the coming years. And Nvidia is going to be creating the custom GPUs to allow the training of the models to protect that data. I also think the software application plays like a Palantir are going to be incredibly tremendous in regards to making sure that individual nations have the sovereignty of their data protected in a meaningful way. I mean, you can't just connect it to ChatGPT. There has to be a lot more sophisticated AI infrastructure there. So not only is NVIDIA going to benefit from Germany wanting to make sense of all their data in a meaningful capacity, but also I think a company like Palantir that creates the software to attach the models with the actual data is going to be important. And Jensen talked about that just now as well. Now, speaking of Palantir, we do have another piece of news that happened yesterday. We do have some sales on Palantir, some insider selling. Most of this was scheduled. I think all of this was scheduled. So we got 325,000 shares dumped by Karp yesterday. Again, scheduled sale. And that's what we had with Palantir. He sold it about a $21 average yesterday. And I think David Glazer sold about 106,000 shares as well. To me, again, a lot of people have been asking comments on this. What does it feel like? Why is he dumping? I just think a lot of people have to remember the guy's been there for 20 years and he has 60 million shares. So when he sells 325,000 and he's going to sell much more periodically over the next decade, it's what you have to do as an insider. You have to sell those shares. The reason Karp is not actively buying shares is because he has 60 million shares, right? Like there's a difference between buying shares when you're not the founder and you weren't granted shares in 2003 and 2006. Versus someone like Anthony Noto, who stepped into SoFi and he's just increasing his exposure because he wasn't granted as many shares as someone who was literal founder of the company. So did Karp not get RSUs at the same time? I'm not sure on that, but I think he also got new RSUs. Like Sham Sankri the other day was buying shares because he had to buy them for the RSU options to ultimately get executed. For me, Palantir's stock price staying flat since earnings has nothing to do with insider selling. I mean, like Peter Thiel, yes, he sold a lot of shares, but I think it more has to do with the fact that Palantir is pretty richly valued at the levels that it's at 2131. When I mean richly valued, I mean $48 billion market cap, growing 21% year over year. It's rather richly, I should say fairly. It is fully priced in terms of the valuation. The analyst expectations for $27, $25, $28, and Dan Ives $35, that's a year from now. And so a year from now, Palantir is closer to $30. I think that would make a lot of sense because they would have another year of growth behind them, and they probably would be compounding at a CAGR of 25% versus 21%, maybe even closer to 30% with adjusted operating margins of closer to 40%. Right now they're at 36%. I think as the financials keep getting better, and we're seeing this every single day as new deals come out and new models come out in terms of how we can understand Palantir, then it's staying below. Being below 22 just makes me more excited. And the goal is for me to just accumulate as many shares as I can towards the end of the year as we get closer, hopefully, to a $30 outbreak by the end of the year as well. Future Investing Tanner says, people say this about the Nubank CEO, like the man owns 20% of the business. It's okay if he sells $1 million for charity. Yeah. I mean, 325,000 shares at the end of the day is just not a lot for Karp. It's like $7 million. It's pennies to the amount of money he actually has in Palantir. And when he owns 60 million shares, you just, you can't freak out over 325,000 shares. Also, his job is to sell those shares. He's like, he has to provide liquidity to the markets, and he has to get rid of the shares he's been holding on for 20 years. The guy's almost 60. Karp is not going to be holding on to 60 million shares when he's 90 years old, right? Like, eventually that happens. But the point is, if the company is executing, which is what I care about the most, the market's going to buy up those shares because the market's going to want to buy profitable AI companies. Palantir, outside of big tech, one of the only profitable AI names. Snowflake is not profitable. Datadog, to my understanding, is not profitable. Databricks, not even a public company yet. Palantir is profitable. And as a result of that profitability, if they can increase top line growth, I think it's going to be better overall. Tom Lee just tweeted me. Yes, he did just retweet and quote tweet the video. If you guys missed it in the beginning of the show, we talked about this clip I found from 2017 where Tom Lee is debating a bear on Bitcoin. It was the guy who's shorting GameStop. I shared it at the beginning of the stream, and it was pretty funny. He says he remembers this from 2017. Bitcoin is resilient. I think we'll get Tom Lee on the show. I'm pretty sure we'll get him on the show. It's not scheduled yet, but I think we'll be able to get him eventually, probably for like a podcast too, not even just a show. I think that was pretty cool. Damn, I thought Karp was younger than 60. He's 56. He's not 60 yet, but he's approaching 60, right? So that's the point I want to make. Peter Thiel as well. Peter Thiel is, I think, 54. Peter Thiel age. But these guys have been doing that. Yeah, 56, dude. Peter Thiel is 56, and then Alex Karp is also 56. Both of them. So, you think about they've dedicated years and years and years of their life to Palantir. They're going to sell shares when the stock goes up because they're the ones who got the stock to this valuation in the first place, right? The question is, how much percentage do they still have? Even Peter Thiel dumping 13 million shares last year. Dude, he has 125 million shares left. Karp has 65 million shares. There's a lot of shares that they have that eventually can appreciate as well. Bro, Amit, did you wash your hair since Karp touched it? I thought long and hard about if I should. It was a difficult decision to make. I ended up realizing that the health of my hair maybe matters more than Karp touching it. So I ended up it took me a minute to decide, but I did wash it. It took me a second, but I decided it was important to wash my hair. So yes, I have washed my hair. Bitcoin right here is struggling, 70,910. Palo Alto down 6%. Bitcoin struggling. I mean, it was just at 71,300. It's crazy to say it's struggling, right? But it's down a little bit right now, just below 71,000 in the pre-markets. Robinhood, $21.08. Let's see how Robinhood does today. I have a clip from Vlad that I want to share after the market open. And Kris will be joining us at 9:45. So we'll get Chris's thoughts on what's going on in the macro at 9:45 as well. But Vlad did an interview last night, and he was pretty excited on the interview as people were asking him what he thinks about the future of Robinhood. So there's a clip I want to share about what he thinks is going well in the company. Passing $21 is a big deal. Yesterday, I said if we can hold 19, I would be happy. Now, in the $21 range, let's see what happens from there. But getting to that $21 range and above is going to be very important to make the next leg up. And the reason for that is because the market is realizing Bitcoin and Ethereum going higher means increased crypto revenues for Robinhood. And last quarter, they made basically 90% margins on their crypto revenue, 157 million in GAAP profits. They should be able to use crypto to subsidize a lot of the other parts of the business, which is important. The other thing about Robinhood is I realized I have $4,000 in another brokerage, all of it in Palantir, like 200 shares of Palantir. And I just transferred it to Robinhood yesterday. And I'll get to see what it feels like firsthand, how the 1% transfer looks like. We got the market open in 50 seconds and what it feels like. So they said in 5 to 7 days, it should transfer my assets and I'll get a $40 1% bonus on that for $4,000. But I'll see how smooth it is. So I get to actually like be a user of the product I've been saying is, so good for them in terms of that 1% transfer and see what it feels like as well. So I'll keep you guys updated on how that transfer goes as well. When Bitcoin was 16,000, I was buying, and now it's 70,000 and people are saying it's going to go down. Well, I mean, for anyone who bought in that low range below 20,000, which was really June 2022, it wasn't that far ago. It was, you guys saw what was happening in the future. And as a result of that, you deserve the gains. And Tom Lee was one of those people at $5,000 saying, hey, maybe Bitcoin is a buy. Tuesday, May 21st, 9:30 a.m. The stock market is now open. Wake your ass up. Here we go. S&P 500, 529 on the day. S&P 500, 529.28 down slightly as the market opens. But there you go. You got the S&P slightly red for the day. Robinhood opens at $21, up 0.74%. We'll go back to that in a second. But Robinhood right here, $21 as we open, falling just below $21, $20.90 right now. As we open in the markets. Macy's 1997 up 4.4%. Apple 191 up 0.06%. Green Wave Technologies is down 57%. The company that was supposed to be the next Faraday Future in terms of the meme stocks, that's down 57%. Faraday Future, wow, down 19%. Actually not that bad. I mean, it's still holding $1.42. This thing was 6 cents last Monday. So it's down 20% on the day, but still holding on to some momentum. So not bad at all. Shopify down 1.68%. Google down a little bit. FLJ, that Chinese company we were looking at, that was a meme stock. This one's down 1% in the market as it opens. Gold is up just a little bit. Gold now at an all-time high. Starbucks up a little bit, 77.88, up 0.44%. Citigroup 63.34. IBM is up. TFC is up. Reality Income is up, and S&P is down a bit for the day. Let's look at the Mag 7. Nvidia is down. Wow, down 1%. So it was up in the pre-markets. Now the market's probably getting a little nervous going into earnings, even though we all know it's going to go well, maybe buying or selling a little bit right before we get into earnings in case there's some volatility. The thing about Nvidia is that the market's expecting $23 billion in revenue. Nvidia could beat that number, but because of the run up 90% year to date, maybe it just doesn't move. Now the implied volatility is around 10%. So a move either 200 billion in market cap to the downside or to the upside. So market's probably a little afraid of if it ends up going to the downside, what happens. But one could argue, and we looked at the market open yesterday, that Nvidia is cheap on a 5-year basis if you look at their trailing PE. So from that perspective, maybe the market ends up rewarding them a little bit more. Amazon falling 1%. So Amazon now from 185 to 181. Google 178. Meta 469. Microsoft 425. They're up based on the event they had yesterday. We'll talk more about some of the things they introduced. Tesla 176. And then we got Apple here at 191 on the day. Let's go to some of the crypto stocks. We got Bitcoin 70,816 getting rejected at that 71,000 level, but it tested it 3 times over the past 24 hours. So I could imagine Bitcoin begins to gain a little bit more momentum from there. And as a result, Robinhood's down as Bitcoin falls a little bit in the pre-markets. Robinhood $20.75. Again, holding above $20 is really good for Robinhood. So if that becomes support for Robinhood at $20, given we were stuck at 16, 17 for a while, I think that'll be really good. Right at $11, Ethereum 3,700. Ethereum not giving up any of the gains. If you're wondering why Ethereum is going up, the spot Ethereum ETFs likely to be approved by the end of next week. So market is getting excited for that momentum and trying to get in before they are approved. CleanSpark up a little bit today. Coinbase 228. And then we have MicroStrategy at 1,700, down about 2%. MicroStrategy up from $1,000 last week as well. GameStop. Let's take a look at GameStop. By the way, Roaring Kitty has not tweeted in 3 days. So I don't know. I don't know if he just came and left, but it's kind of sad that he's gone, because it seems like he kind of came for, it's like he came to pump it and then he just left and now it's gone. GameStop 21.45 down 7%. He also didn't do any live streams, anything great. Like it was kind of just these memes and people got excited and then he dipped. $6 billion market cap right now in GameStop, down 7%. There's not really a leader to rile the troops here. AMC as well, down 3.37%. I still think the story is not necessarily over. I still think there's some juice left, but I think it does depend on a catalyst like Roaring Kitty. Also, Andrew Tate tried to step in and be the savior of the GameStop and AMCs of the world, and he's not talking about it anymore. Like as soon as the price goes down, people don't want to talk about it, which, you know, obviously is how a lot of these influencers act when they're rallying troops around assets that make no sense, like a GameStop or an AMC. But we'll see if Roaring Kitty comes back and says anything. S&P 529, Palantir 2125 on the day, down 1.7%. If we go below 21, I'll be trying to pick up another 100 shares. So let's see if we get some downside momentum on Palantir today. Robinhood $20.91. Ethereum 37.84. Palo Alto Networks down 5%. So it was down 10% yesterday after the bell. One of the main problems on Palo Alto Networks was that their billings is like up, but not up as the street wanted it to be up. And so the CEO said yesterday, well, billings is a broken stat. And as soon as he said that, I started laughing. I was like, you can't say it's a broken stat, dude. Like just because the stat isn't working the way it was working for the past 5 years, you can't say it's broken now if it's going down versus up. But his argument is, hey, the market shouldn't be looking at billings. The market's like, no, mother effer, we're looking at billings. And as a result, Palo Alto taking a little bit of a dip. Now, if Nancy buys this dip, I think Nancy knows something's coming with the government in Palo Alto, but we'll see if she ends up buying it. Alibaba down about 2%. Nvidia now recovering a little bit, up or down 0.5%, but it was down 1.3%. HIMS 1775. So HIMS is taking a little bit of a fall, down 5%. It was at almost $20 yesterday, now down 5%. So people probably taking some profits on HIMS. Tesla 178, they're up 2%. And Netflix, this was just an astonishing story when I saw this morning. Netflix is actually at 640, dude. Netflix fell to 550. It's up almost 20% from the earnings dip. And it just goes to show that the market does present opportunities. It's just a question of if the company's actually performing. And if they are performing, then this was a hell of an opportunity for Netflix as well. Amit, why don't you sell puts on Palantir? I actually do sell puts on Palantir. I don't have any open right now, but yeah, usually I do sell puts on Palantir. Right now, I'm just trying to just get more shares at this $21 range because, look, I personally think that Palantir is not going to be at $21 for the next 7-8 months. I think we're going to make the gap higher to 23, 24, and we're going to capitulate or consolidate around that range and then try to get to the 30s close to early 2025. That's how I think it's going to play out. So I like shares under 22. I think we've tested $20 many times and it rebounds every time just from a technical perspective. And we haven't gone below 20 in 4 months. So the idea that we actually fall below 20, we see 19, 18, it would have to be Palantir really messing up something, which what I'm seeing in the guidance is like nothing is really going to create that downside momentum, or the macro taking a massive fall. And I don't know, given the market cycle that we're in, if the macros, the S&P is going back down to 4,900. It's possible. And if it does happen, then yeah, Palantir below 20. But if not, that's where I think 21 is a sweet spot. Like I think 22 is getting a little pricey just given how the analysts are thinking about it in terms of growth. But I think below 20 is just very hard to achieve. So 21, there you go. There's your price. And so that's why I'm liking to buy shares right now at that level. Do you ever sell covered calls on Palantir? Yes, I do. Not a lot of covered calls, but I sold some for 24 expiring on this week. I don't think Palantir is going to get to $24 by this week. So I picked up like 6 cents of premium there, nothing crazy, but yeah, I do sell covered calls on Palantir. S&P at 529, Ethereum at 37.8, Alibaba at 86.80. Peloton has had some very interesting news. Peloton is down 13%. Now, why is Peloton down 13%? They're doing a little bit of restructuring, which is hurting them a bit. Let me pull this up right here. And then I want to talk about Tesla and some other pieces of news we have as well, the OpenAI stuff that I wanted to discuss. But Peloton is doing something really, really interesting. So let me pull this up right here. Also, real quick, Lam Research has done a 10-for-1 stock split. They're in the semiconductor space. I said this yesterday. I think Nvidia, if they announce a 10-for-1 stock split and get this $1,000 stock to go to $100, and they do a little bit of a buyback, Lam Research is doing a $10 billion buyback, the market is definitely going to get excited for what's going on with Nvidia. I mean, the stock split is going to be something that they're going to want to see. Okay, so Peloton is planning to do a global refinancing to address their debt. And that's what's getting the market a bit upset right here. So Peloton will launch a global refinancing, selling $275 million of convertible senior notes due 2029 and entering into a $1 billion 5-year loan term. An additional $41 million of notes may be sold within 13 days. I really think someone needs to just buy Peloton. It's a $1 billion market cap. This complicated financial shit that they're doing to try to restructure their debt to make it make sense and pay shareholders. Like, I don't think shareholders care anymore about owning Peloton stock. I think it's time for them to get bought out, pay a slight premium above the $1 billion and get this over with. But the fact that they're doing all this stuff, I think the market's just like, this is getting ridiculous. We don't know why we're even operating anymore with Peloton. And as you can see right here, people dumping their shares, now down 15%. On the day. Canada CPI, that is correct. We just got it 2.7%. That came out about 20 minutes ago. I don't know if that's necessarily bad or good. Let me actually pull up the projections on Canadian CPI and see if that's lower month over month or year over year. That is, it looks like it's lower. It looks like it's slightly lower. Yeah. Let's share this right here. And again, Canada might cut before the United States, especially if England cuts before the United States. So Canada CPI month over month actual 0.5 versus 0.6. That's, oh, wow. Yeah. 2.7 versus 2.9. There you go. The Fed president comments that we read 20 minutes ago are signaling inflation's coming down. Jay Powell is saying inflation's coming down. CPI in America was 3.4 versus 3.5. Now Canada 2.7 versus 2.9. Also, the Bank of England said they're looking to cut rates within the next 2 months. maybe, just maybe, inflation's actually coming down a bit more dramatically than what we were thinking. Look at the core CPI, 0.2 versus 0.5. That's incredible. Year over year, 1.6 versus 2%. This is incredible numbers by Canada in regards to CPI. It was 2.8% last month. Yeah, I don't think we're going to get a cut in June, but if Canada follows the US in July or September, that cut might end up coming. And that would be incredibly bullish for inflation coming down. Okay, market's taking a little bit of a dip right now. Where's the S&P 500? S&P 529 and then QQQ 453. Yeah, they're down slightly. Honestly, I kind of think it makes sense for the market to take a little bit of a breather. We've had a pretty nice run over the past 2 weeks, so getting a little bit of a decline is not crazy in the markets. The question is, what are the momentum plays right now? Robinhood, $20.94. That's getting momentum because Bitcoin above 71,000 and Ethereum. So that should see some momentum. Stocks that have been beaten up a little bit are starting to do well. HIMS just took, a big move to the upside yesterday. Now people are taking some of their profits. So that makes sense. Coinbase as well, moving as Bitcoin moves higher as well. MicroStrategy now green, 1734 for the day. So we're seeing some stocks gain momentum. Some stocks take a little bit of a dip as they either mooned over the past couple of weeks or they've been stagnant and they've been waiting for some catalysts like Bitcoin to go up in order for them to gain momentum. So we had Lowe's earnings today. We had Macy's earnings today. Today's May 21st. Yeah, those were the main earnings today. Tomorrow we see Target. That's going to be important. We see Snowflake. Obviously we see Nvidia and we see Elf. So Snowflake, Nvidia, and Elf. Wow. Tomorrow's market close is going to be jam-packed, dude. Snowflake, Nvidia, and Elf. Snowflake has, been down 30% ever since their CEO quit. Snowflake right now, 162, down 1.4%. Elf, in regards to makeup, is up a little bit today, but they've been down because Ulta Beauty said that their same store sales are going to be down for makeup. And then obviously Nvidia, it's going to be incredible to see the numbers that they put up. One quick stat I want to show you guys in Nvidia that I also thought was interesting. Nvidia is expected to increase their net income by 504%. Here's a chart, 540%. And it's going to be pretty damn insane. So if Nvidia does what they want to do in the Q1 estimates, or if they beat these estimates, 540%, their quarterly profits are going to go a bit higher. Thomas says, no, I meant Canada cut in June is expected now. I still think June cut is a bit too early, dude. I don't think they're going to cut until the US cuts, and I think the US is not cutting at least until July. If they cut in June, that would be incredible. That would give the United States a lot of liberty to say, all right, if Canada's cutting, Europe's cutting, then we should start cutting. But it'll be interesting if they actually cut in June. What else do we see right here? Eli Lilly's going up. Okay, so let's go to Eli Lilly and let's check on them. And then we'll talk about OpenAI for a second because they had some really interesting things. Eli Lilly, wow, it's up 4% on the day. What happened to Eli Lilly? Hold on, what's happening with that? 4% is big, dude. That's a $700 billion company. Eli Lilly, what's the news on them? Oh, China approved their diabetes drug. Wow, there you go. China approves a diabetes drug for Eli Lilly, up 4%. Market cap now $775 billion. Robinhood, $21.09. Look at that. Robinhood. So Eli Lilly doing well on the approval of that drug. Robinhood, $21. Breaking through that $21 range. Not bad at all for Robinhood. So seeing some momentum there in the context of what we have for Robinhood as well. So Robinhood and Eli Lilly gaining some momentum there. Where's SoFi? Did not look at SoFi. S&P 529. SoFi, 717. It's down. I don't know what to say about SoFi anymore, dude. I don't know. I don't know what they're going to have to do. Noto's got to do something. I don't know. At this point, the short float, yes, it's 19%, but it doesn't seem like anyone cares about squeezing SoFi. I don't know. I feel like this is that limbo territory that Palantir went through from $6 to $9, that Robinhood went through from $7 to $8. Like, a lot of these stocks eventually broke out, but they stayed in this limbo. SoFi is just staying in this limbo a little bit longer, and we'll see eventually if it can break up. Victor says, Hood is crazy. I just bought some shares the other day at $16. Actually, because of their 24-hour markets product, I got my dad 100 shares at like $16.50. And we got that on the 24-hour market. So those 24-hour markets, they're not perfect, but they do present opportunities. Like if you bought GameStop at $50 on the 24-hour markets, then yeah, you were not going to make money on those when GameStop collapsed the next day. But that's because GameStop is not necessarily the best company. But Robinhood, a company that I believe was undervalued at $16, we got to scoop up some shares at like 1 a.m. When there was no trading. And those are real shares. Like my dad is up like a real 30% on those shares, right? So I think that's another reason the 24-hour markets are really exciting as well. Okay, let's talk about this OpenAI stuff that we've got going on, because this controversy is just incredible. And I want to discuss this. So Scarlett Johansson, I don't know how many people know Scarlett Johansson. Kris is going to be on in just a little bit, guys. He'll be on in like 2 minutes, and then we'll talk to him. Scarlett Johansson is some type of actor. I don't know what movie she's in, but apparently she's like a really important actor. Let me Google her right now. She was in the Avengers. Okay, so she's an important lady. Okay, so Scarlett Johansson was approached by Sam Altman to be the voice of OpenAI's new GPT-4o model system with their new like voice first operating system. This is what Scarlett Johansson wrote yesterday. Last September, I received an offer from Sam Altman, who wanted to hire me to be the voice. After much consideration and for personal reasons, I declined the offer. 9 months later, my friends, family, and the general public all noted how much the newest system named Sky sounded like me, which has just come out a couple days ago. When I heard the release demo, I was shocked, angered, and disbelief that Mr. Altman would pursue a voice that sounded so eerily similar to mine that my closest friends and news outlets could not tell the difference. Mr. Altman even insinuated that the similarity was intentional, tweeting a single word, her, a reference to the film in which I voiced a chat system, Samantha, who forms an intimate relationship with a human. And that's true. Altman literally tweeted the word her the other day, and people made the connection. The GPT voice is very similar to Scarlett Johansson. What did OpenAI do? They probably trained some fancy models on Scarlett Johansson's voice, and then they altered it in a variety of different ways. And then boom, you've got like this voice that's not literally her voice, but it's a voice that sounds like it is her voice. And let's just say she was pissed off. As a result of their actions, I was forced to hire legal counsel who wrote 2 letters to Mr. Altman and OpenAI stating that they cannot continue to do this. In a time when we are all grappling with deepfakes and the protection of our own likeliness, our own work, our own identities, I believe these are questions that deserve absolute clarity. I look forward to the resolution in the form of transparency. What Scarlett Johansson is saying right now about what Sam Altman did with her voice, to me, and I have my own opinions on it, but I want to know what you guys think in the chat. Is Sam Altman actually grimy for doing this? Is he like, is it just business, or is it actually like a violation of her personal identity and sovereignty? What he did is the reason why Ilya left, co-founder, and one of their head ML researchers left the other day as well. So we're seeing a lot of these like head people at OpenAI leave, and we covered it on the channel a couple of days ago. One of the reasons they're leaving, I think, is because Altman, I don't think he gives a fuck, dude. I don't think he cares. I think he just cares about producing the best products, creating the best ecosystem that he wants to create. And as a result of that, he's going to do whatever the hell he has to do and get the job done. So from that perspective, it kind of seems like Altman's just running fast and breaking things, in the words of Zuckerberg back in 2012. And he really doesn't care. He really does not care to be able to use someone else's voice and, violate their intellectual or their personal identity. Now, granted, from a business perspective, I don't know if she has a real case to be made, because it's not her voice. So I don't know how she can sue them and tell them to stop using her voice. But it obviously is kind of grimy, and Sam Altman has got that dog inside of him. And we're seeing that Sam Altman has that dog inside of him. What do you guys think? No integrity? Is he a scumbag, or it's just business? In my opinion, dude, it feels like he's a scumbag. Like, I'm also on the side of business, and like, yeah, you got to do what you got to do. But also it's like, dude, you could have used another voice, as June says. Like, if someone really didn't want to be violated in that way, and, technically you didn't use their voice, but you basically did. It just, I don't know, dude, it feels grimy, and people are not going to trust you. People are not going to trust you. Now, is it going to affect the stock or like OpenAI's company itself? No, because they'll get away with it. They're a big tech company. But it just makes people not want to work with you. Now, in the context of Apple, if Apple creates a deal with these guys, which it looks like Apple's trying to do, I wonder how Apple's going to navigate the fact that Sam Altman doesn't care and he's just running through walls. Satya Nadella is kind of realizing that he bought 50% of OpenAI, and they're kind of a little bit of a hodgepodge and a mess, even though their technology is amazing. It's going to be interesting to see how Apple navigates that as well, if they end up partnering heavy with them. GameStop down 8%, S&P 500 down slightly on the day. Where is Robinhood $20.78, so a little bit of a drop from that $21 level we saw on Robinhood. HIMS 1819, that's up a little bit more, now is down 2%, and then Tesla here at 178 on the day as well. Have you seen what his sister says about him? The guy sees grimy for sure. Yeah, his sister is not the biggest fan, let's just say. of Sam Altman. His sister does not like it. It seems kind of crazy. It seems like, dude, when you get super rich or successful, your family, like your siblings, your kids, they end up not being the biggest fans of you. It seems like that happens a lot for people that are very successful. And Sam Altman, I think him and his brother get along really well, but him and his sister, do not get along as well. Tesla right here, 178. So let's read a note by Adam Jonas, who put out something about Tesla this morning in terms of what he said. Oh, before we get to that, real quick headline for you guys. DJT, Donald Trump's company, the Truth Social thing, reported earnings yesterday. $770,000 in revenue, $327 million loss. Market cap is $6 billion. So yeah, it's pretty damn interesting, dude. That's the fact that this thing is holding $6 billion is incredible. Again, I think there's some special interests that are buying the stock because they want Trump to get elected, because they don't want TikTok to get banned, and they think Trump's will get friendly around TikTok. So we'll see what happens, but that is what we got going on in the world of DJT. Where is DJT right now as well? Where is DJT? DJT is 46.11, down 4% on the day. Reddit as well. Reddit is 62.10, up 1.14%. Okay, so what did Adam Jonas, one of the biggest analysts on Tesla, have to say today? Before the upcoming vote, Elon Musk needs Tesla more than ever. AI's appetite for capital and data increased Tesla's importance with the Musk-onomy. As investors question if the CEO's commitment is less or more, we believe Elon needs Tesla more than ever before. Why do we believe Tesla is needed now more than ever? AI is a capital game. The broader collection of Elon Musk's businesses may collectively invest many tens of billions of dollars in AI infrastructure in the coming years. Cost of capital is deterministic for AI supremacy. A Tesla without AI would set a precedent that would increase the cost of capital across Elon's other AI endeavors. And Tesla's success lowers the cost of capital of the Musk-onomy, in our opinion. The reason I think Adam Jonas is coming out with this note right now is because he's realizing that there is a lot of chatter around Elon potentially leaving if his vote doesn't go through. Now, I think Elon is getting at least 60% of shareholders to vote for him. I think he's going to get approved, and I think Elon will be fine. But if he doesn't get those votes, I think Morgan Stanley is just saying, hey, we still think he's not going to leave, because we can't fathom a world in which Elon wants to build massive AI infrastructure, get into all these different AI projects, and not have the capital that Tesla allows. And that's one of the argument I think shareholders are kind of bargaining with when it comes to Elon. They're kind of calling his bluff that he's going to leave, because they're like, well, where are you going to get the money to buy 85,000 H100s from Nvidia if you're not at Tesla? You can only use Tesla's ecosystem. By the way, you're already, $13 billion in debt, or you borrow $13 billion to buy Twitter, but you've got to pay that back. How are you going to pay that back unless you have something like a Tesla that you can potentially sell your stock in, which means you have to be getting more stock over the coming years. So I think that's the argument shareholders are putting on his head that want to vote no to his compensation package. But I also think Elon is Tesla. Tesla is Elon. And at the end of the day, he doesn't care. I don't think he's going to leave if he doesn't get his package. He's just going to create another package. But I think he's going to get paid in some capacity. It's just a question of how he gets paid and what he chooses to end up getting paid for. And if he doesn't get paid, I think he's going to do another vote. If he does get paid, it's going to be good for Elon. But Adam Jonas is basically saying there's no way Elon can leave, because where is he going to go when it comes to being able to spend what he wants to spend on AI? All right, folks, we have our resident contributor joining me here today on the Market Open to talk a little bit about what's going on in the macro and everything else in regards to the economy. Kris Patel, what's up?
Nothing much, man. Just I'm sorry I was a little late this morning. I was actually trading a position, so I was like trying to get some of the new positions that I have filled, and basically it was just give me 1 second, I'll be right back.
Good. I'm curious what he was trading. We're gonna have to find out a little bit of alpha from Kris while he's getting ready. One thing that Kris posted yesterday is that he did get into HIMS. And HIMS, he's up right here on this position on HIMS. Nicely. HIMS right here, up about 127% on some calls. Again, when Kris does calls or leaps, they end up expiring years from now, right? So that's what we're seeing in the context of some of the gains he has on HIMS. Kris, if you can disclose, what were some of the tradings you were, or some of the positions you were trying to get filled, if you can tell us?
Nah, I'm not going to describe it. No, nope. But basically, it is a play on a theme. Like I know that when what's his name, Ram, was on your pod yesterday, he spoke about themes basically, and this is a theme that lays into what I'm seeing in the general market. So as an example, what are some major themes that you're seeing, like in your world?
Crypto.
Yeah.
See, AI energy spend. I would say those are two big ones.
For me, I'm tracking spending by baby boomers because the thing is, 51% of the total net worth of like the entire country is in the hands of baby boomers. So all the industries that the baby boomers are likely to spend money on are going to do extremely well. So, right now we have this weird economy where you have all these baby boomers. They have very little debt because they've paid it off for so long. They own their own homes and they're in their golden years and they're looking to spend that money, right? So on the other hand, you've got all these younger millennials and Gen Xers, well, not so much Gen X, but literally millennials that don't have a lot of money. And a lot of the money that they do have is going towards debt servicing, whether it be student loans, whether it be increased rents. So you're kind of seeing this bifurcated kind of system a little bit, where the younger generation doesn't have money to spend and the older generation has too much money to spend. So that's why you're seeing certain weird dynamics in this market. Like in New York City, you'll see like this restaurant that caters to like older folk is packed out versus one that's like more hips, new is struggling, right? So it's kind of this weird scenario that's happening. So there's a lot of industries that are going to be benefiting. One of the industries, of course, is travel and leisure, because the one thing baby boomers have is the ability to travel and, and have time off. So I'm looking at industries that are going to benefit from that. Another one is healthcare. As you get older, healthcare just becomes a normal part of your day-to-day existence. So you have to take care of that. Same thing with like long-term care facilities, So this entire generation, as they retire, as they get older, the people and the businesses and the industries that cater to them are going to be in a secular growth pattern. So
you have calls on adult diapers.
Pretty much. It's all adult diapers.
Okay, let's talk about this. So you showed me this federal beige book. I didn't even know this was really a thing. I heard of this before, but I never looked at it. So today was the first day I looked at it. What is the beige book, and what did you conclude from the comments that we got from the Fed presidents?
So each one, it's not so much the Fed presidents, but it's more along the lines of what data points are the local Federal Reserve banks seeing in their specific region. And this is a very interesting thing because every region can react to different things differently. So like in New York, they're seeing a strong housing sector, right? So you're seeing housing market strengthened with spring selling season picking up. The thing is, though, New York has a lot of supply lock, though, because there's not a lot of inventory. Whereas if you go to Dallas and Texas, inventory is spiking, right? So this is where it gives you like a more granular look at how the economy is doing. The good thing is if you see certain consensus among Boston, New York, Philadelphia, so on and so forth, all the way through, that means that it usually will translate into something at the national level. So as an example, one of the things that I'm seeing here is that labor is starting to kind of moderate. Right. So if you look through this list, one of the things that you're going to see is that labor continues to moderate. Wage inflation continues to moderate. Employees are staying around longer than they were last year. Right. So that demand of that arbitrage that workers had, like, or this, not arbitrage, they had they were basically in the zone of being able to demand higher wages. That is slowly taking a step back. And as it takes a step back, that means that wage inflation pressures are going to start to kind of come down slightly. And hopefully that will lead to more disinflationary measures going forward. On the other hand, you also kind of want to see, so look at that. Several reports mentioned weakness. No, keep going up a little bit. Well, so right there, right? Several reports mentioned weakness in discretionary spending as consumers' price sensitivity remained elevated. Auto spending was buoyed notably by some districts by improved inventory and dealer incentives, which means that, when you look at these, when we were looking at auto inflation rates, like last year, they were just through the roof, right? But now you're starting to see that dealers are making cuts. And if they're making cuts, that means that auto inflation should theoretically be coming down slightly, you know?
Yeah, it's really interesting. I mean, what I looked at just like briefly in the morning from all these 12 districts is pretty bullish on wage growth, wage inflation. Kris, you got to put your phone on silent. And you got too many people texting you from Patreon asking for advice right now. And employment growth. So do you also think these comments that we're seeing were relatively bullish to the point that a rate cut is coming sooner than most people thought?
You know, the next one, this is from April, by the way. The next beige book is actually coming out next week on the 29th. So we'll have a lot more updated information when it comes out. So a lot of this stuff is a little bit more backwards looking that we like, especially considering right now the market's just very dynamic, right? So the key here is that, you know, this beige book gives us an indicator at the granular level how the Fed is thinking about everything that's going on, right? So like I said, like one of the things that I spoke about last time is that the Fed is willing to accept a few points of unemployment, right, to get to their 2% target, but they're not going to let the entire economy go to shit just so that they can get back to 2%, right? So it's kind of like this balancing act that the Fed has to do in order to, you know, in order to make things work. So, you know, it's one of those things that you just have to keep your eye on. You know, it gives you these clues into like the level of, you know, the mind and the thinking that the Federal Reserve governors have, especially at the local level, you know. So.
Right. HIMS, you're up a decent amount on this one. You got in at like $11. The GLP Ozempic stuff, do you think the market's overreacting by giving them this 30% gain, or it's like really going to impact their earnings?
I mean, I have no clue, man. When earnings comes out, we'll know. But remember, this is a new product, so the numbers are not going to show up until probably 6 months to a year from now, right? But you know, but overall, the business is still doing well. You know, if you look at its earnings growth is there. They're doing share buybacks. So, you know, a lot of times what happens is people want to know what's going to happen 2 months, 3 months from now, and it's hard to project that out. But I can say that definitively HIMS is in a good place in terms of like growing their demand. So
you know. Okay, give me your thoughts here on Apple. So I think you heard Dan Ives say that there's a lot of growth coming. There's a potential OpenAI partnerships at 192, was at 167 a month ago, broke out from that range. 29 PE, 0% growth or negative growth. Is it something to look at, or it's just the market getting way too excited right now?
I mean, okay, so there's a couple of things. Number one, people don't factor in the share buybacks into their equations, but they should, because the amount of share buybacks that Apple is doing is just freaking crazy. Like it's just nuts. So their EPS growth is going to be buoyed very, very strongly by the number of share buybacks. So in terms of like price appreciation on the stock, that should do well just based on the buybacks alone, right? You know, when it comes to their growth, it's all going to depend on how Apple is able to kind of like materialize this AI theme into their core products, right? Remember what we spoke about? Apple's main job is what? To sell more iPhones. So if they want to sell more iPhones, they need to create differentiated products that get people to upgrade from their current phones. So how do you do that? Well, you have to create, you know, new products and new categories of products and new technologies that kind of force people to upgrade, and AI could be that catalyst. So maybe some people in the market might be saying, well, look, AI could be this great revenue generator for, growth accelerator for iPhone users looking to upgrade, right? So Apple makes a lot of money when they sell more phones. So, you know, this upgrade cycle will be one thing. The other thing is maybe they'll be able to somehow monetize the AI experience on the iPhone and charge developers a certain fee to do it. There's like so many things that, you know, are not privy to us, but I do think that Apple long term, it should be the cornerstone of most people's portfolios. They're not going anywhere. They're very entrenched. They're very blue chip at this point.
You know?
you know.
Actually, for people that saw the video, my grandpa who does options, he sells a lot of puts on Apple, and it's usually it tends to work out because Apple's not going anywhere. We got this breaking news, Kris. Nvidia has been halted for new chips from AWS. They are halting orders of Nvidia super chips to await the updated model. And Nvidia's down a little bit right now. Investors are fearing that this is creating a little bit of a air pocket in demand for AI chips. Do you think this is a story, or do you think Amazon's like, no,
we
we're
literally
gonna buy more.
about,
We just want a better model.
We just spoke about this last year. I mean, not last year, yesterday. Remember? Yesterday, this was the exact conversation we were having, right?
Yes.
Which was, if there is any indication of a slowdown in orders, then Nvidia was going to take a hit. Now, I don't know if this is the giant thing that we were looking for, but it just goes to show that this is a cyclical business, right? Amazon probably feels like, hey, we're pretty good already with all the stuff that we have. So we don't want to keep adding like last generation's AI chips. We kind of just want to wait for the new generation of AI chips. Now, the question is, how is Nvidia going to respond to this? You know?
Now the thing is that they're saying we're going to wait till Blackwell comes out, right, for the new generation. So isn't that still bullish at the end of the day?
Well, it also means that maybe Amazon is like, hey, maybe we don't see as much demand currently, but they also don't want to like screw over Nvidia with bad press and basically get put in the back of the line when it comes to new Blackwell chips. Right. So maybe this is like their way of saying, hey, listen, we don't want to piss off Nvidia, but we also don't necessarily have as much of a need for the AI chips as people are thinking,
Which of the Mag 8 from this valuation, I include Faraday Future in my Mag 8, would you buy from today's price and hold till the end of the year?
Google.
Really? Over Meta?
Google and Meta. Google and
No,
Meta.
you got to pick one. You got to pick one. Put in the chat as well what you guys think in the chat.
I don't know, man. It's really hard.
I'm going with the motherfucking visionary that is Elon Musk. Elon Musk, okay? I'm going Tesla, baby. No, I'm just kidding. But I thought you would say Meta because it's down. Google's at
no, but remember though, Meta said that they were going to ramp up spending, right? So if they're going to ramp up spending, it's going to impact their bottom line. If it impacts their bottom line, the stock price is going to be muted. That's why you're seeing Meta kind of like waffle between the 400s right now, not going above the 500 mark that it was earlier in the year.
Okay, so you're picking Google.
Yeah, I'd say you told me at the end of the year. So if you want end of the year, it's Google.
Okay, so what's the bull case for the end of the year for Google?
Election spending. People forget election spending is there. I mean, that's the same thing with Meta too. Meta has probably captured some election spending there also, but Google, I think, is probably going to capture more of that market. So,
okay, last thing for you here, and we kind of talked about it already, but you can give your final thoughts on it. Nvidia earnings tomorrow. I mean, do you think these guys actually crush, or if they don't, how do you think that impacts the broader market?
I don't know, man. The expectations are set pretty high. So
22.8 billion the market wants.
Listen, and if there's one thing that I've come to respect is that no one knows anything about revenue targets for Nvidia because the demand, like everyone is talking AI. So I'm not even going to try to guess. We'll know the numbers when they come out. But I will say this, the expectations are high, which means that even a slight miss on the expectations means that the world will come crashing down for a little bit.
Do you think they do? Do you think they do a split?
I don't know. Maybe I don't know. I don't know, man. I don't think there's really that much logic to doing a split, to be honest. But
all right.
Yeah.
We will see what happens. Kris, thank you for joining. I will put Chris's Twitter in the chat for those that want to check it out. He also has a Patreon. Kris, before you get out of here, why should people join your Patreon?
You shouldn't.
This reverse psychology is not going to work, dude. People are smarter.
There's enough people on there already, dude. I'm good. I'm good. No, because the thing is, like, I work with people. I talk to these people all the time.
Yeah, but you're going to
so
retire soon, so this is going to be you're going to be a full-time therapist really soon.
No. I also I'm taking that test on Monday. No, Tuesday, because it's Memorial Day.
Oh, the STD test?
Yeah, exactly. The STD test, the one I keep testing positive for, but I hope that, you know what, things get cured. I have, the thing is, like, I want to provide value, but at the same time, I want to make sure that I'm not creating such a large audience that I'm basically diluting the whole thing. Because, you know, you want to be a little bit more personalized. You want to address people. You want to address things. And I'm doing well in the markets.
It's not like an AI version of you.
Yeah. You know what I am going to be excited for? After next Tuesday, I already started working on getting the other stuff lined up so that this way, we'll have that conversation after Tuesday.
All right.
Yep.
We'll keep going from there. Thanks, Kris, for joining. We'll see you probably in a couple of days back on the show.
Take care.
Bye. All right. So that's what we're looking at right now. I have a couple of quick clips I'm looking at, guys, that I want to show you. So here's Mike Wilson. This is the guy who said, hey, I'm saying S&P to 5,400 right now. He just went on Bloomberg and he just gave his updated thoughts on what's going on in the market. Let's react to this for a little bit. Then we'll take a look at markets and then I'll get you guys out of here. Here's Mike Wilson this morning.
Headlines in the last 24 hours is Mike Wilson's capitulated. He's moved from 4,500 to 5,400 and all of that. Can we just start with the skew? The wide range of outcomes, because that was the headline of the piece. The bear case versus the bull case, has it ever been this wide?
Well, not for us. I think for other people, they've had wider skews. And look, it just reflects the uncertainty that has been the case for the last several years. And quite frankly, I wouldn't be surprised if we hit both sides. You know, I mean, like, that's kind of the world we're in, which is, you know, think about this year, and we talked about this at the beginning of the year, which is we had three sort of equally similar sort of outcomes. One was a soft landing, just the Goldilocks, which is kind of consensus now, and that's our house view. Then you have the no landing, which is kind of a reacceleration, the stickier inflation, even maybe a stagflationary outcome, which is what the market was thinking about in April. And now you're back to a soft landing, but you still can't rule out a recession either, right? So, like, all of these are very possible, and you know, they could all happen with a higher than normal degree of, you know, certainty. So that's the.
I don't understand how he's saying, yeah, anything is possible. Like, isn't his job to predict what's going to happen? And right now he's just saying anything can happen. So he's not really taking a massive position here. Obviously, I mean, yes, anything can happen, but the point is kind of to, you know, tell people what's going to happen.
That's really the headline that should have been out, is that, look, nobody knows anything, right? I mean, and particularly at a point in time. And I think maybe our mistake is just admitting that we don't know as much as maybe everybody else claims to. That's
actually hilarious, dude. I mean, I kind of respect him for this, because obviously he got the bear market thesis wrong. So now he's just saying, yeah, I don't know anything. But it's like, he is a top strategist for 20 years. It's not like this guy doesn't know what he's talking about. But even this is like humbling him. And now he's just like, you know, anything might happen at this point. We can't really explain how things would go at. Again, it was a contrarian view to say that the markets would rally in spite of interest rates going higher. And those who saw that ended up being right about it.
That's called humility, something that we've learned the hard way over life. But anyways, the point here is that the meat of our report this year, or this update, was really more about how do you make money in an environment where you have basically 0% upside and the base case, and you could have 20% upside or 20% downside. And that's what clients pay us for, right? It's the process. It's understanding, okay, what kind of environment and how are we going to navigate that and manage that? So we spent a large part of the report yesterday talking about trade ideas, specific sector ideas. That's not the headline that people want to write about. That's fine. That's your prerogative. But that's what we want to talk about.
That was never going to fit in the headline. No. We will talk about some of that stuff in just a moment. Let's talk about the headline just briefly.
Sure.
Are you de-emphasizing the 5,400? Are you saying as a price target, it's not actually that important to you in a firm? What is that?
Well, it's not important to most clients. Institutional clients don't care about the target on the S&P 500. Let's be honest.
I don't know if I believe that. I think every client cares about that target. Otherwise, the targets wouldn't be in the headline. I don't know. Maybe I'm wrong. He knows probably better than me, but I think he's just saying that to say that everyone cares about that headline target.
It's like they're trying to pick stocks. And look, one of the most important things we talked about in the report is alpha generation this year has been spectacular. The way we measure it with our client base, which is significant, is this is the best alpha generation, alpha capture we've seen since we've started recording it since 2010. So that's what people care about. We're trying to help them in that their process of, okay, what kinds of stocks work in this environment? Oh, by the way, when we skew from these different outcomes, you need to be ready to pivot towards different types of securities. Right now, like our house call is it's a soft landing Goldilocks outcome. We're not that confident that we want to make that bet fully. Like we think it's still late cycle, which means quality. Okay, large caps over small caps still. We like staples over discretionary. We have two defensive sectors, overweight, utilities and staples, because that kind of protects against slowing growth risk. So there's a bunch of different things, but the main factor that's been working is quality. Quality's been the most consistent factor, and we don't see that changing.
You know, it's so weird, dude. Like he says we're in late cycle in a bull market. On average, a bull market is 7 years. Right now, we're in not even fully 2 years of it, right? We still have 6 months to go before the year is done for it to be 2 years. And he's saying it's late cycle. If this is late cycle, then he thinks 2025, we're getting a recession. And I mean, the problem is what he said in his comments just now didn't really give it a reason for that. Robinhood, $20.72, Bitcoin, 70,763. What's the reason for the recession? Is it lack of earnings growth? Is it multiple expansion is too high? Is it unemployment going up? I mean, none of those macro arguments were given. He just asserts we are in late cycle. And it's hard to believe him because, I mean, he said we were in late cycle in 2023, right? And we were at the beginning of a cycle. Now, maybe ChatGPT created this cycle, but nonetheless, it happened, right? And you had plenty of time to pivot, but, you know, he pivots when the S&P is at 530. I don't know. Very hard to kind of see how that goes down. Now, again, Mike Wilson is a very smart guy. This guy's not a scrub. He knows what the hell he's talking about. But when you get some things wrong over the course of 2 years, and then you just say, well, we're late cycle, and if things go up, they go up. If things go down, they go down. We don't know what's going to happen. It kind of shows that maybe you weren't looking at the best data that was playing out. I've been trying to find the bear case every single day, dude. You guys know we look at the bear case every day. What's happening in the economy that could get this sucker to tank? I mean, the S&P has been holding high 520s for almost 2 weeks now. What gets this thing to go back to 500? What gets us to go to 4,800? Maybe Nvidia crashing the bed, but we know that's not going to happen. Maybe crypto, falling to 20, 30,000. But again, crypto falls if the market falls. So it's more of a macro call around where the market is going for crypto to come down. Crypto is just a function of liquidity. If the market's going to go up, that means there's more liquidity. If interest rates come down, there's definitely more liquidity, which means crypto at least has a chance to perform. So I don't think crypto takes down the market. Is it a black swan event? Yes. But what is that black swan event? When is it coming? Is it a Chinese invasion of Taiwan? What's actually going to happen? And if that's the bear case, then I don't know if there's anything super fundamental around what the bear case looks like. MGOL is halted. What is this thing? MGOL, is this another stock you guys find? Of course, another stock that you guys recommend in the chat. That's up 282%. Of course, why not? Why not? 282% on MGOL. I wish you guys could mention these stocks when they're like 2 cents, 3 cents. You tend to always mention them when they're up 282%. Now, granted, probably not worth mentioning when they're out 2 or 3 cents. But it's just crazy. Every day you guys find something new that's taken off. Insane. Absolutely insane. Yeah, these are turd trades. That's basically what they are. They're turd trades. Let me play a video. I said I would play this video. I didn't get to play it yet. By Vlad yesterday. He was in a podcast. He said something really interesting around what the main focus is on Robinhood for why they've been able to build what they've built. So let me pull that up real quick. I thought it was a good podcast. It was Earn Your Leisure. It's a really good show. And he basically said this is why he thinks Robinhood is succeeding. And we'll talk more about them after this. All right, here we go.
Yeah, a lot of people ask me what the secret sauce of Robinhood is. So maybe I'll share it with you guys and the viewers. So every other financial company, pretty much every other financial company out there, when they build a new product and roll it out, they like to start out with the financial model for that product. They have like a certain return on equity, profit margin goal that they want to achieve. And they ask themselves, how can we build a decent product around these financial constraints? And I think Robinhood might be the only company that does it a little bit differently. We ask ourselves, how can we put the most money back into our customers' pockets and make that product and the experience 10 times better? And then the financial model is kind of secondary. Then we ask ourselves, how can we like make it work as a business second to that? And I think really that's the reason why we rolled out commission-free trading. That's why we rolled out our retirement product with the 3% match, our gold product with the industry-leading yield, and now the credit card with 3% cash back on all categories and this amazing design. It's because the way we think about product development is like fundamentally inverted from how other companies do it. And I think it's pretty rare in financial services in particular, because a lot of people get into financial services because they want to make a lot of money and they're looking out for the bottom line and profits. So I think, simply put, that's why Robinhood is able to do the things that we do, because we have this fundamentally different approach to how we deliver value to customers.
You know, I tweeted a very long post last Friday on this exact topic. And the argument was Robinhood thinks about product first and then how to make money off of it. MGO Global is unhalted. Now it's up 300%. Congrats to anyone who got in on this. But when they think about product first, you design the user experience around how much money can we put back into your pockets, how you enjoy engaging with the app. And then guess what? You're probably going to use the app more, and then we'll make money. And I don't think any fintech outside of Cash App, which has done a really good job of product experience, thinks of product experience the way Vlad does. And now Robinhood is down 2% on the day at $20.47, but it's insane because $20.47 yesterday, I remember looking at it right before I went to the gym, and I was like, oh, wow, we're at 2040. Like, this is incredible, right? Now I'm like, oh, we're at 2040. We were just at 2150. Like, the bar keeps going higher. And if $20 becomes legitimate support for Robinhood for the next few months up until Q2, then we're going to be in a new ecosystem for Robinhood, or a new life cycle for the company as they continue to grow. Vlad also, throughout the interview, he sounded pretty confident as they asked him a bunch of questions about the meme stock rally and what's going on. He basically said, look, we're ready. Bring it on. If you guys want to trade, billion times a day, our systems can handle it. We're good to go. And he basically said, yeah, it's up to us to prove that we learned our lesson. That's it. Like, it was just like now it's a challenge for us, and we're ready to tackle on the load. The problem is Roaring Kitty stopped tweeting. So he was sending all that good old traffic to Robinhood. GameStop down 7%. Now he stops tweeting. Maybe the meme stock rally actually ends up not playing out. So we'll see. We'll see what happens there as well. Rocket Lab keeps creeping up. Rocket Lab. Let's take a look at that one. Rocket Lab up 1.82%. Yeah, bottomed at 375 or 347. So I guess that one's, getting a little bit of a bounce from the lows. PayPal as well. I mean, this thing can just not find any momentum. It's annoying because I think their earnings are incredible. Their growth is incredible for the company, for the expectations that they need to have. But it's stuck. PayPal's probably gonna have to do the same thing SoFi does, which is some type of catalyst that is external to their financials being good to get people excited. MicroStrategy right down below 1,700 right now as Bitcoin takes a little bit of a drop. So we'll see what happens with PayPal. But that one down below 64. Starbucks gaining a little bit of momentum. Starbucks has got sold off pretty aggressively over the past month. I mean, year to date, yeah, it was at 88. Now it's at 78. At one point, it was at 97. Now it's at 78. So Starbucks due for a little bit of a bounce there. TFC 39.36, IBM 173, Dell 146, SLG at 52.99, Marathon 21.75, CleanSpark 18.42 on the day. SMCI almost below 900 today as Nvidia takes a little bit of a dip as well. I don't consider myself a wheel guy, but I've been selling puts and cash secured cover calls on Hood for like 6 months, and it always works out. Yeah, I mean, obviously it depends on the stock, right, for it to work out. But if you have the right stock, then you know kind of how the price should work, then things aren't that bad. So let me show you guys a trade that I just made. I actually closed this trade, I think when I was playing one of the videos. But here's the trade. I'll show you it on my phone. So I sold a $22 cash secured put, speaking of puts, on Robinhood for June 28th. And I closed it for a 35% gains today. So what does that mean? That means I sold when Robinhood was about $18, a put in the money saying Robinhood will not be $22, meaning it will be above $22 by June 28th. Robinhood goes from 18 to 21.40 or whatever when I sold it, which means the put ends up not expiring, but the put ends up becoming worth less because when I bought it, Robinhood was at $18 and the put strike price is 22. Now, as Robinhood gets closer to 22 at 21.40, we're 60 cents away from me being almost out of the money, right? And so the put ended up decreasing. So I sold an above strike in the money put option. But the reason it worked is because Hood went up. If Hood would not have gone up, let's say if Hood went down to 16, 17, Hood right now at $20.58, then that put would have gained more value, which means I would have lost value and I would have had to pay more to buy to close the put. So today I closed it out and we made about $150 basically in a week, 35% off selling a put that is above the strike. Usually the way I tend to think of it is you sell the put below the strike and enough below the strike where you don't have a high chance of getting assigned. But if you think there's a catalyst, like for Palantir, for example, if we sold some puts on Palantir in like December saying, hey, Palantir is going to be $24 by December, the market's going to give us some decent money right now to sell those puts in terms of premium, even if Palantir is not at $24 right now, because if Palantir is above $24, but then we are taking a broader risk against the market. So we're going to get paid for that. So let's do that right now. I mean, I'm not going to do it, but if we go to December 20th, sell put, let's say $25, the market's willing to give us $535 a contract, and we would have to put up $2,500 in collateral, $25 times 100 shares. So 535 divided by 2,500, that would be a 21% return by December. And so it's not a bad return. The question is, do you think by December Palantir will be above 25? If it's not, you can always roll it. But if it is, then you can close it. And if Palantir gets to like 23, that put will expire, or not expire, but it will decrease in value, which means you can close it out for cheaper than you bought it because you're getting closer to the strike price. And that's kind of the idea I played there with Robinhood at $22. So that's one move we made today. Philip says, Amit, I walked by Jack Dorsey on my way to work in Boston today. I feel like you with Vlad or Carp. Really? That's crazy, dude. Walked by Jack Dorsey? That's incredible. That's cool, dude. That's so cool. What were you like? Was it like on the street? Were you like at a Starbucks or something? That's, dude, you should have said hi. You're like, you love this guy. You're like a big square guy. You should have got a selfie or something with him. I think Jack would be a guy who would take a selfie. I think he's cool enough to like say hi to people. That's so cool. I want to get a podcast with Jack Dorsey, dude. He's such an interesting guy. I would love to ask him. So he's a very philosophical guy as well. I think he eats like one meal a day. I remember his Lex Friedman podcast. He has a very unique diet and routine, and the way he's like very feng shui, I guess is what I want to say. So it would be dope too. Tanner says it was probably just a homeless person. Near South Station. Wow, that's incredible. That's incredible. That's great. All right, not bad. Not bad at all. He seems down to earth. He does. He seems very down to earth. He's very confusing. What he did at Twitter to me is really weird because Twitter was basically stagnant for 10 years and you would think Dorsey would have, made it better. So I always thought it was very weird. And the censorship, like Dorsey is so pro Bitcoin, which is anti-censorship, but when he was the CEO of Twitter, he was like capital C censorship. Like, dude, Twitter censored a lot when Jack Dorsey was running it. So it's always been so weird to me how Dorsey thinks of freedom and Bitcoin and anarchy, but he was the head of a company that like did not embody those ideals ever, and really went against those ideals in a pretty aggressive way. I mean, they banned Trump. They literally banned a president from the platform. So it's very interesting. And I think that's why he left Twitter, because he was kind of ashamed of how he handled it. And he was happy that Elon bought it. But now it's just a question of, how does he philosophically think of governing Square as well? He didn't care. Yeah, he didn't care at all. I saw Dorsey in Boston too. He asked me for spare change. Does he actually look homeless? Hold on, let me pull him up. Jack Dorsey. Does he actually look homeless? He doesn't. I mean, when he wears the beanie, maybe. He has a good beard, dude. Look at that. That's a good beard, man. That's a hell of a beard. I think he's from Mississippi, dude. He's not from California or New York. He's actually, that's how he's grown up in his adult life. But okay, this one he looks kind of homeless. I'm not gonna lie. This one he looks kind of homeless. He did have the beanie and beard on. Yeah, that beard is epic, dude. Epic beard. All right, so Missouri. Sorry, not Mississippi. Missouri. That's where he's from, Missouri. All right, what else do we got? So we talked about pretty much everything I think we needed to get through Anything else we're looking at? We talked about Lowe's earnings. Oh, I did an update on Rivian. So I said on Twitter on Saturday, hey, I'm looking at Rivian because the options look really mispriced on Rivian, particularly for 2026. I got a lot of comments on this saying, yeah, you want to maybe really look at their cash burn. And that's what I looked at. And I watched a lot of the CEO interviews. I don't like the cash burn, dude. I really don't. And I'm afraid they're going to have to do a pretty nasty equity raise, creating dilution. I'm looking at Rivian to $20 by 2026. That's the option I'm looking at. It's really cheap right now, dude. And not just 2026, December 2026. So it's at $10 right now. I'm saying, can this bad boy double by 3 years from now, right? December 2026. There's like a 7x return in a spread if we could do that. And I was looking at their balance sheet too. I'm like, dude, these guys are burning a lot. And the qualitative feedback I got from people around Rivian is that they see a lot of them in Arizona, a lot of them in Florida. Like they're definitely ramping up how many cars they're selling. And I'm like, oh, that's great. But if these guys can't make a profit on these cars and increase gross margins, I don't know, man. It feels like a little bit of a dicey trade to get into. And I don't think interest rates getting cut are necessarily going to help them that much, because if Tesla can't CAGR at 10% year over year in vehicle deliveries, if Lucid can't sell vehicles, if BYD is eating everyone's lunch in China, I don't really know if the market's ready for Rivian to be the one that scales. Now, the actual bull case is Apple just buys these guys out or takes like an equity stake in them, which I think would be super awesome for Apple to actually like have another part of their business that's growing that's outside of phones and it's cars, because Rivians are an amazing product. But I don't think Tim Cook's going to do that. I don't think Tim Cook is going to do that. And I guess we'll see. Amit, I've lost money on meme stocks, and I'm glad I did, because I will never get involved with another meme stock run again. I thought it would be fun, and it's not. Well, Austin, you learned a lesson that I learned as well. I'm sure many people learned in the chat. Everyone, I don't care who they are, everyone has lost a little bit of money gambling on stocks that we probably shouldn't put money in. And this is why the FOMO when Faraday Future and GameStop get to 70. This is why, the reason I said the day Roaring Kitty tweeted his tweets on Sunday 2 weeks ago, and then the thing and everything's going to the moon. The reason I actually said I have no FOMO and I'm not buying, which I was correctly, I bought $1 of GameStop so I could see it on Robinhood easily. But outside of that, I bought nothing, was because once you like go through an experience where you really do lose some decent money, whether it's $500 or $5,000, you just realize it's not worth it. And you realize it really is like gambling. Like you're literally chasing a high that you don't have any chance to achieve. And already the stock market, one could argue, is gambling, right? You're betting on these equities, hoping they go up in the future. Like, so if you're betting on stupid shit like Faraday Future, that's up 5,400%. You don't know when the game of musical chairs stops and you're left and there's no chair to sit on. That was a fire analogy, dude. Some fucking Dan Ives is getting into me right now. So from that perspective, yeah, it's okay. As long as you learn from that. And, it sucks because when the FOMO was happening, it's like, all right, I got to get into it as well. But that's why I said, unless you have the money to get into it, like that you're ready to lose, if you're losing money that you actually care about, it just sucks so much, dude, because you know that you're probably going to lose it, but you end up losing it anyway. Where's PayPal? PayPal down 1.14%, S&P 500. A little bit of a pump on the S&P. We're flat now. Now we're green, 530 on the S&P. So not bad for the S&P. And where's the Qs? 454. Let's end it there. We'll do word of the day. Put it in the chat. Put in the chat if you've lost money on meme stocks, or how much money have you lost on meme stocks? Put it in the chat. Let's see what people say. I've lost 11 grand on a biotech stock a year ago. That's not really a meme stock, I guess, but it's the same philosophy. Like, it's a company you probably shouldn't get into. You think there's going to be some astronomical gains, and then you get screwed, right? With a reverse split or share dilution or blah, 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 blah. So it's like, I think everyone loses that. Sam lost 25,000. Okay. That's some money. Ada lost 5,000. ET FaceTime is up $20. Does Palantir count? No. Palantir. Well, it was a meme stock in 2021 for sure. So I guess you could count it from there. Lost 9,000 on AMC. On Beneficial, lost a couple grand in 2020. Lost 1,000 from AMC, but I gained more on Hood. Only if you consider Tesla a meme stock, dude. I think people should just be happy Tesla's not at fucking, what was it? Tesla's not at 130 anymore, dude. Like, I think everyone should at least be happy about that. Lost a shitload on SoFi. Okay, I wouldn't say SoFi is a meme stock, even though it's performing not the best, dude. I don't know. Noto's got to do something with SoFi. He's got to do something. Again, to me, to me, I've concluded that the product is what fuels everything, and I don't think SoFi cares enough about their product, which is why it's hard to imagine that they're going to do better. But if they change the product, maybe that changes everything. Lost 50,000 on dumb bets. See, Austin, you should feel a little bit better. Everyone here in the chat has lost some money. Everyone has lost some money. It is what it is. Michael says you're some serious gamblers. Dude, I like this chat because we have gamblers in the chat, but we have sophisticated gamblers, if you know what I mean. You know, like gamblers that are like, all right, they'll lose 5-10 grand, but they're working with more money and they know what they're really doing, but they'll gamble with it. I don't think this chat is Roaring Kitties chat in 2021, where everyone's putting their life savings into GameStop. I don't think we have that type of a chat. But we have people that'll put 0.05% just for the hell of it, you know, and that just means we're not boring. It means we're a little fun, you know. Okay, word of the day. Salmagundi.
Salmagundi.
Damn, I almost got it perfect. If I didn't say die versus D, I got the I wrong, but Salmagundi.
Salmagundi.
Any mixture or miscellany. The fuck is this word? Miscellany? What is this? Miscellany definition? What is this? Miscellany definition? A group of collections of different items, a mixture. Okay, so it's a synonym of mixture. Has anyone heard of this word? Salmagundi comes from the Middle French word salamingondin. Our family reunion turned into a lively salmagundi of stories, jokes, and memories. Her jewelry box contained a colorful salmagundi of beads, gemstones, and trinkets. Salmagundi. Okay. So it essentially means mixture. You know, the word I use to describe mixture is amalgamation. I learned that word. That was like an SAT word I learned back in high school. Amalgamation just means a combination of things. Salmagundi sounds way cooler, though. I'm not going to lie. So Salmagundi, next time you have to make a mixture of something, you can be at a party. Like if you're at a, I was about to say cock party, dude. If you're at a cocktail party, if you're at a cocktail party, you know, like, and you're making drinks and you're the guy who's like, yo, let's make a Salmagundi. People are going to be like, what is that? And you could be like, well, it's a mixture of combinations of drinks, and you can sound a bit more intellectual. So there you go. Okay, so that's what we got. The video I was supposed to upload yesterday, the response to the Guardian article about Palantir, I still needed time editing it, so that'll be out probably like 6 p.m. today. So that'll be out a little bit later today. I actually uploaded it and I almost posted it, but then like there was like this part of the video that was wrong, and I was like, okay, well, I need to like, and I forgot to take one part out. So we'll finish editing that. That'll be out in a little bit. The Guardian article, they put a hit piece out on Palantir a week ago. I think the journalist just like got a couple things wrong, so I'll be talking about that. And then we'll be back for the market close at 3:45 and keep going from there. Again, Matt Hogan will be joining the channel this week. For those that don't know Matt Hogan, he is the CEO of Bitwise, which is a top 3 Bitcoin ETF that has achieved $2 billion of capital in their ETF. So pretty awesome guy. There you go, Matt Hogan, CIO. Sorry, he's not CEO. He's the CIO of Bitwise. And so we'll be talking to him about what he thinks is going on in the world of Bitcoin and where Bitcoin ends up going over the coming months. All right, that's it for me. Thank you, everybody, for being here. Appreciate it. I'll see you guys on the market close at 3:45 p.m. Bye, everyone. Have a good one.